Today we're starting a new series, and this is going to be featuring a new TFSA portfolio that I'm building out from scratch. Well, kind of from scratch. It has been sitting around for a little while, and now I've decided what I'm going to be doing with it. So the plan for this portfolio right now is to do updates every single Monday, and the idea is to deposit around $200 in the account every single week. Today we're going to be going over all the holdings in the portfolio, as I did quite a bit of buying today just to get this portfolio up to spec and have relative weightings of a balanced portfolio, but a little bit more geared towards the growth side. We also have some dividend stocks in here in order to generate cash flow, which we can use to continue to reinvest in the portfolio as well. If you guys are new here, my name is Daniel, and here on this channel, we talk about stock market investing. Typically, we talk about growth stocks, but now we're kind of branching out into a more balanced portfolio, as well as we'll occasionally feature my growth stock portfolio, probably about once a month. We're going to continue breaking down stocks as I see fit, as well as talk about interesting news items that come out on my current portfolio or just in the general market, but related to Canadian stocks. In this portfolio, I currently have 13 different stocks. I'll talk a bit more about the top 5 holdings, but here I'll mention all 13 right now. We've got Enghouse, Kinaxis, TD, Power Corp Canada, Good Nature Products, Sun Life Financial, Algonquin Power Corp, TELUS, Riocan, the Vanguard S&P 500 ETF, Horizon's NASDAQ 100 ETF, as well as Well Health Technologies. The top 5 holdings in this portfolio, starting with number 5, is Good Nature Products. And if you guys have been with me on this channel for quite a while, you know that I've talked about this company, so I'll link that video down below in the description. But essentially what Good Nature Products does is that they develop plant-based recyclable materials. This is a play on the world trying to go towards more renewable materials as well as biodegradable materials. And I believe this is a future of all consumer packaging, because at the rate that we're buying goods online as well as in stores, this cannot be sustained. Our landfills are filling up, and we need a better way to package our goods other than plastics that are one use and end up in the landfill. These will sit in the landfill for thousands, if not millions of years before decomposing, and who knows what toxic chemicals they leak in there. Good Nature Products is to help companies become more sustainable by having plant-based packaging that biodegrades or is made from plant-based material and can be recycled very easily. The 4th largest holding in this portfolio is Power Corp Canada. I actually talked about this stock just a week ago in my 5 stocks to buy right now video. Power Corp Canada plays mainly in the financial services sector. However, they're more of a holding company. So they purchase and own different financial services stocks in their portfolio or just entire companies. Currently, they have a very nice dividend yield of 5.45%. And the reason why I'm mostly interested in the stock is because they have a fairly large stake in Wealthsimple Trade. And you know me, I love Wealthsimple Trade and what their mission is, and I believe they are going to be one of the largest brokerages in Canada in the next 20 to 30 years, and they're growing very rapidly. The reason why I say 20 to 30 years is because right now millennials and Gen Z are their main customers, and as these customers grow in age as well as financial status, this is only going to make Wealthsimple Trade a lot more profitable, even though they offer $0 commission fees. I believe they make money based off the bid-ask spread when you're trading Canadian stocks, as well as they charge a fee for currency exchange. The 3rd largest position in my portfolio is TD Bank. And I personally bank with TD and honestly think that they're better than Royal Bank as a customer because I can hold dollars in a TD Bank and pay 0 fees for doing that, as long as I have a minimum balance of anywhere from $3,000 to $5,000 in the bank account. However, Royal Bank, they don't have many accounts that actually allow you to have 0 fees. There are some accounts, I believe, if you hold multiple services, you can basically get to 0 fees or very little fees. However, if you want more of their higher end service accounts with free checks as well as free bank drafts, you're going to pay a monthly fee of maybe like $10. So personally, I still do a lot of banking with TD just because of the convenience of being able to go into the branch and talk to a representative and get cash right away if I need it. I hold this stock because they have a 3.87% dividend, which has dropped down as the price rose up, but they're also continuing to expand into the US. And right now, TD stock just broke above its previous all-time highs, and we could possibly see another run-up based on momentum. The 2nd largest position in this stock portfolio is Kinaxis. And if you guys know Kinaxis and have been watching his charts, recently the stock got hammered. But Kinaxis, what they do is they're a supply chain software company. So they help companies that buy and sell physical goods, whether that's raw materials or finished goods, and they help them on the supply chain side. That's basically coordinating how materials that come from their suppliers end up in their factory or in their warehouse. Supply chain management has been a huge challenge during COVID-19 as companies have just not been able to forecast their supply chain based on the huge fluctuation in supply and demand in the entire economy. In supply chain management, if you have that software, it allows you to react very quickly to changing supply. And this is why Kinaxis had a stellar year in 2020. However, in the latest quarters, they didn't report the greatest results, and therefore the stock sold off from highs of around $215, which you saw about 9 months ago, all the way down to around $150 today. The stock still doesn't trade very cheap as it's got a PS ratio somewhere around 20 right now. So the stock is not for the faint of heart, but if you do believe in the long-term value of supply chain management, then Kinaxis is probably your best bet out there. Now for the number one holding in this portfolio, and that's Enghouse. I spoke about Enghouse maybe a couple months ago, but basically Enghouse is a software and services company that supports many different verticals through their two business segments. Their two business segments are the Interactive Management Group as well as the Asset Management Group. Enghouse stock has recently been hit, falling from a highs of around close to $90 all the way down to low 60s today. Enghouse does pay a dividend though of around 0.88%, and they're still considered a growth company, and they have fairly good margins because they're also a software company. So this is a portfolio tracking sheet that I'll be showing every single time that we're doing this series. So on here you can see all the different holdings that I have right now, and the total value of this portfolio today is $2,048.07. I just deposited $200 of cash earlier today, so I will be spending that hopefully later on this week, and you'll see an updated portfolio next Monday. But as for now, you can see all the different holdings here. You can see the profit and loss, the percent return. Everything is highlighted in green, that's positive, and everything that's negative is in red. I just refreshed the page because I realized the 1-year charts weren't showing up and there was an error there, but now they're here. So you can see at a quick glance just what the stock movement has been like over the past year. However, for some stocks, it looks like we won't get a good glance of what's been happening, maybe because there's an issue in the back end. But for the most part, most of these you can see what the trend looks like over the past year. I've also got the dividend yield column here so you can see if a stock is yielding dividend and how much yearly income I could make based on the number of shares that I have right now. Hopefully we're going to grow this as the portfolio grows, and we'll see what the total dividend number is. For now, I shall add another section here because we want to figure out the total amount of earnings from dividends. So currently you can see the portfolio earns about $30.18 for $2,000 in the entire portfolio. And a yield as a percent of the portfolio is 1.47%. I also have some pretty graphs down here showing you the percentage of holdings based on the actual stock ticker symbol, as well as the sector weighting. So right now you can see that technology makes up the largest portion of this portfolio at 29.9%. Finance is 14.4%, and the rest of them are somewhere around 4 to 10% of the portfolio. I likely will keep this as a heavier weight in technology and maybe finance, but basically the idea is not to let technology get too big. I'll probably cap it to around 33% of this portfolio. Some of the stocks that were in the portfolio originally were Well Health Technologies, which is why it's actually down $11.80 or around 13%. This was bought close to the date when Well Health was trading at $9.80, and I haven't averaged in yet, but I'm planning to because Well Health sits somewhere around $8 today. The other holdings that were in this portfolio previously, as you can see, were Kinaxis and Enghouse, which are up 24% and 47%. GDMP was also a relatively new addition, and it wasn't bought today though. It was bought, I think, maybe 4 or 5 days ago, and already the stock is up 7.5%. The rest of the stocks in this portfolio were bought today, so there's very minimal movement. It's like plus or minus 0.1%. If we scroll on over, we can also see the P of the stocks, so you can see which stocks are actually profitable. So you can see that about half of the stocks are profitable versus the other half aren't. However, these ETFs are also not considered profitable because they don't actually have earnings themselves. But I'm sure if we were to aggregate all the companies in those ETFs, we would likely have positive earnings. But really, these ETF plays are just to help further diversify the portfolio and keep it from plunging like 20 to 30% if we have a huge market correction. So that sums it up for my initial portfolio review. Let me know down below what stocks you think I should be putting in this TFSA portfolio. I'm not looking for any more penny stocks. I'm looking mainly for dividend growth stocks as well as fairly established high growth stocks. If you could leave your bull thesis down below as well, that'd be great and it would help out the community. If you want to stay up to date with this portfolio, then remember to subscribe and hit that notification bell. If you guys want to check out other videos of mine, there's two on the screen here. One of them goes over my Wealthsimple trade portfolio, just the regular personal portfolio, and the other one is another high growth stock. If you're there, I'll see you there. If not, keep up the grind and have a great day.